Good morning, everyone, and welcome to the Quantum Leap homework session and trade plan setup for Thursday, April the 17th, 2014. We have an interesting scenario going on today. We have a short week. The futures in the market are closed tomorrow for Easter weekend, so we have Easter, short week. We have options expiration today, so could be a very interesting day. So as always, trade safe, okay, keep things tight, don't get in a bad position and let it go really bad on you. My name is Doug McKay. I'm the head moderator and founder of Quantum Leap. Quantum Leap is a private Skype chat room. It's not a commercial venture. It is just a group of retail traders that have been together for a few years. If you're interested in finding out more about it, you can send me an email at d.mckay@stealthtrader.com right here, or send me a Skype request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. You will need a Skype account in order to get into the Quantum Leap trade room. So each morning we come together and we do market analysis and we go through a routine. And that routine includes looking at the key numbers and going from the macro to the micro. Then we look at the trend levels, macro to the micro, and then we get into the structure of the market, volume profile, more in-depth chart analysis, and if I don't talk too much and Howard has anything in terms of Elliott Wave or Fibonacci, he adds to it. Lately I've just been a hog and taking all his time, but of course he's got some other projects that he's working on for us at the moment anyway. So if you are watching this on YouTube, you might want to skip ahead. We still have to go through our routine, but you're watching after the fact, so you might want to get to the more in-depth chart analysis and the daily hypotheses. Before I start, I have to get the disclaimer out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. No one at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please do your own due diligence and trade your own trade plan. Okay, so let's get the numbers out of the way. Obviously, the macro numbers we're looking at is we're back above the 1837.75, our year open, so we're back into a bullish year. Our month open is 1864.50. 1865 is the microcomposite VPOC that we're watching, the major balance area. So that's going to be a key level. It was 64.50. It's now 65, so I'd be looking at the 64.50 and front-running the 64.50 if you're long and you're looking to scale. Our month high is the all-time high and the year high at 1892.50. Our month open is 1846. We're trading above that right now. They could come down and test that 46. The level I'm watching is the 45.25. And then our previous month low is 1823. 50, and I believe that's going to be just above the key line in the sand that I'm using, which is that CLVN at 21.25 for possibly a test of the lower 1800s, if not 1800 itself. So let's take a look at the intraday numbers from yesterday. We had a Globex open 42.75, high of 49.75, and a low of 40.50. We opened the auction out of range at 49.25. And believe it or not, we had a fourth neutral day. It was just incredible. Look at how we're, and this just shows you the battle that's going on. We had a normal day, neutral, and then 3 neutral days. Then we have now 4 neutral days. We're going to bust out of this in a major way. Where we bust out of is going to be the key. I'm still leaning towards the upside right now, but any catalyst could destroy that, and we'll talk about the levels where I'll be looking to get short. Our opening swing yesterday, 51, high, 48, low for a 3-point. So again, we kind of got mixed signals yesterday because we look at the clues, and there's a series of clues that I go through to try to figure out what type of day is setting up. Are we going to get a vertical development day? Are we going to get a rotational day? Well, usually when you're opening auction out of range, especially following 3 neutral days, you're looking at the probability of a vertical development day, and we didn't get that yesterday. But then you look at what type of day you're following. You're following a neutral day. The rule is neutral begets neutral, except for the fact when you get 3 in a row. Just incredible. But the opening swing, larger than 2 points, gave us a clue that we're going to have a rotational day. The initial balance high 51, initial balance low 42.25, didn't really give us any clue. All the intraday numbers were higher again. Our 1230 number was higher, 49.25. The high was higher at 57. The low was higher at 40.75. Our close was higher at 53.50, and our VPOC shifted up to 49. I gotta check that out before I do anything, because I had, Howard, do you want to do a download? Because I did a couple downloads and my VPOC shifted back down to 46.25. So let me just do a full data download here while we're doing everything else. That way it's ready. Sorry about that. Let me go back to the sheet. But can you do it as well, Howard, just so that we have, and anybody else that can chime in to make sure. I've been having a few little minor data issues as of late.
I have 46.25 as my VPOC.
Oh, okay. Well, you had it written as 49.25.
No, must have been a typo. Sorry.
Okay, then we don't have to do the data download. Perfect. Okay. So our VPOC was higher at 46.25. Our 20-day ATRs are currently running just over 20.25 for the RTH, just over 22 for the full session, and just under 10 for the Globex. A little bit of a contraction here, but not much. They still have been expanding out. And then our value area was higher again, so accepting value higher. Our value area high 50.75, value area low 42.75. I had a different value area low. We'll have to take a look at that. And then we broke the IB to the low side first at 9:44 Central, so just inside of the first 15-minute pocket. Going over to the daily report, I've got to just do a quick look here. Just because I want to see what we expanded to. Our high currently right now is still at 57. Okay. So looking at our ATR targets, 1857. And again, this might expand out, but to the high side, our 20-day ATR target is 1869.30. Let's call it 1869.25. And to the low side, 1834, and that's right at that CHVN in that triple distribution zone down there. So we'll take a look at that on the composite. But I like that. Of course, we had job claims today. And core Canadian CPI, but the next big one is going to be at 9 Central, 10 Eastern, which will be the Philly Fed. So just remember, we've got news coming out in the first 30 minutes of trading, and then we've got natural gas. And then, of course, we've got a holiday weekend, so I expect to get into some type of a drift in the afternoon, as we're coming into the holiday, except for the fact that you've got, OPEX. So I don't, I'm kind of interested to see how volatile the day is actually going to be. And I'm still getting a data download there, so we're going to go right to the macro to the micro and take a look at the trends. We're still waiting for that. So I always like to start with the monthly. Of course, the monthly, you've got good separation and slope on the 9 EMA and the 20 SMA. Those are the two moving averages that I like to watch. A retest of the 9 EMA will take you down to 1788, so I don't think we're really looking at that today. We're trading near the close of the prior month at 1864, so we're kind of trading inside of the middle distribution right now of last month, but the trend itself on the monthly is very much intact. We had weakness on the weekly. We came down and closed last week below the 9 and the 20, but this week we've popped back up and we're trading and coming up near the open of the prior week, which was at 1861. It's actually 1861.75, which is the key number I'm watching, but 1861 would be a good spot to look to scale if you're long, because we're coming up into that open of last week. But this, the trend looked like it was starting to be violated, but then we popped back up. But we are seeing some weakness coming in on the weekly for the time being, but the trend is still holding. On the daily, you can see that we're just having chop on the daily, and it looked like they were going to come down and start the retrace in the downward trend. We created this technical gap right here, then closed back up above the 9, and now we're back up above the 20. So no real trend on the daily, we're just going sideways. Taking a look at the geometric chart, there's 3 forks on this chart. There's the upward sloping fork here in red, and then the longer term downward sloping fork, and then I added this other downward sloping fork last week using the B point off of the high at 1892. Now there's a couple interesting energy points. One being this one right here. We're due to hit this tomorrow at 1819.25, 1820 area. Yesterday we said if we held above the center line of the shorter term downward sloping fork, that would likely come up and test the upper line of the longer term fork, and we missed it by about 2 ticks. I think it was 1858.25, and we got as high as 57, well, a little bit more than 2 ticks, but we came up darn close. Now we're coming up and threatening again. So what I'd be looking at is a rejection right here and a failure to break out of that, break above the 57, 58 level. If we fail to break out of that, then I'd be looking for a rotation back towards the 55 and coming down towards this energy point, which is due to hit tomorrow on the 19th. I'm sorry, the 18th. Is it the 18th? Yeah, it's the 18th. But if we get above the upper line of the longer down-term fork, then you could look for an extension and a move up to test the upper line of the shorter-term fork that we added in last week. That's going to take you up into the 1871 area, 1871.50, 1872 area. If you remember, a couple of weeks ago, or last week, that was a key area that we were watching. So let's just mark that down on your chart, these 2 levels here, because if you do get the move up and we get a holiday drift, I'd be looking up towards that 71, especially with the fact that the full session ATR target to the upside is at 69.25, so that puts us up and gives us that possible range to that particular target. Taking a look at the intraday trends coming into the morning, we've got a nice trend going on the 4-hour. We had a couple technical gaps, came down, closed this first technical gap right here, tested the 9 EMA, came up. This is 2 good examples of a tech gap being closed by price and the tech gap being closed by time. So you can, actually a combination of both really, but you had this tech gap right here that was really closed by time, and then we popped back up, and then this one we kind of went sideways and sort of drifted lower, but this was more closed by time rather than price, even though if you would have taken the Mr. Sneaky here and got short on this bar, you still would have had a fairly decent nice scalp on the tech gap. But now we've popped off of the 9 EMA. We've got slope and separation to the upside. So the 4-hour trend is actually pretty strong coming into this marketplace, especially with the fact that we just created and closed these two technical gaps without failing the 9 EMA. That tells me that we've got probability of higher rotation. Now we could, we're actually creating a little bit of a tech gap again on the third try. So I mean, right now to close the tech gap, I'd be looking for a move back down towards that 1849.50, and that's a key area that we're going to talk about on the composite. Going over to the 30-minute, just drill it down a little bit for 30 minutes, same thing. You've got start of a trend happening on the 30-minute, but we've created a technical gap, and a close of the tech gap is going to bring you down probably into that 1853 area by the time we get there. Or if we drift sideways, it'll probably close it somewhere in around that 1855.25 area. So although we're starting a trend, we do have a gap to fill. So we consolidate through time, or we come back through time and price to close that gap. And just keep an eye on that 30-minute one, because that's going to probably be a good clue on the open. And then here we got exactly the same thing. We've got a very strong trend coming up. You're seeing a little bit of a lack of loss of slope, but you got good slope and separation up until this point. You had a technical gap. Then we came back. There's your Mr. Sneaky, and actually probably even close to a FUBAR Mr. Sneaky set up there, a FUBAR Mr. Sneaky tech gap, and we come back and close the tech gap, but we did not violate the 9 EMA. So this, as long as we stay above that 1855.25, that's going to be a key area for us this morning on the open. If we get below it, then I'd be looking for that rotation back down towards 49.50, which will close the gap on the 30-minute, and a possible rotation down to test that 45.25 CLVN. But if we can hold this 55.25, then you've got to be looking up towards 61.75 and the 65, which is the major target above. So let's hopefully have our download. We did. So let's take a look at the big picture right now. So currently right now we have a microcomposite that I've drawn from the February 21st through to the big breakdown candle that we had on the 10th of April. And the microcomposite VPOC is 1865. That's our major target right now. The value area low, we're inside of value, so we're back inside of that value, and we're above the year open. And that value area low at 37 on the longer term microcomposite, and on the shorter term microcomposite that runs from March the 26th through to the big breakout candle, they both are correlated in around that 1836.50 to 1837, and wrapped around the year open. You've got the CLVN at 39, but I really think you got to be looking at that 37.75 year open and 37 value area, microcomposite value area low as the key area. And then below that, then you look for that rotation back down into this triple distribution zone that centers around 35.25, 29.50, and 25.25. But we've gapped up. We did not close the gap, so we've got a naked close right now at 1839.75. That has not been filled, but we're holding value overnight. Net inventory overnight was long, and we're holding above this this 55. Our gap close for today on yesterday's close is 1853.50. So if we get below 55.25, that's going to be your very first target is that gap close. But if we can hold this 55, I'm looking for a drift up to 58.75, 61.75, and 65. With 65 being the major target above, and then the other side of balance being that 68.50 CLVN, excuse me, and the value area high. The value area high for the long-term microcomposite is here at 1867. So, you know, it's hard to tell what's going to happen because of this this little bit of a weird scenario with the weekend, but we do have some clear levels that we can play off of today. So let's go over and take a look at the. Still have not formed this Renko reversal bar. See how long this is taking to form? So again, keep watching this possible walk the line setup. They could wait until the open to set this up and then rip it up into that 58. 75, is it 58, 75? Yeah. So let's get our Globex chart up here. Get our numbers moved over. Now, of course, we're trading 56, and our Globex high is 57. So that Globex high can be expanded out a bit. So, you know, we have to put our levels in right now based on what we know, but they could very easily. Sorry about this. They could very easily be expanded out. What did I just do here? Lost my day I was working on. All right, so currently right now the Globex high is right at the prior day high. So, you know, if we hold 55 on the open, look for them to go and take out the overnight high and test that range high at you know, 57. And that's going to be the initial target above. Well, actually, I don't want target. I want overnight high. If we don't expand it out even before. So we'll just have to keep an eye on this while we're doing our homework. And then this would be an area that I'd be also looking to trade off of. I'd be looking for responsive sellers to step in and hold us inside a range for a rotation back towards the 55 and a quarter. But if we get buying and we close above the 57 area, then I'm looking for the first target above is 58.75. So you want to, you know, if you take the breakout trade, you want to get in and you want to get funded and scaled before 58.75 with two targets above. And there's really not much resistance, okay, above this this 55.75 above this 57. So there's really no area that I'd be looking to trade off of to the short side here until we get up to that 65. So 61.75 is going to be my secondary target above 58.75, with the main target being here at 65. And that 65 through to 66.50, I'd be looking for a possible, you know, responsive selling to step in and give us a rotation back down to test, you know, the 58.75 level, if not the 55 and a quarter. Our overnight low is all the way down at 47 and a quarter. Just above our VPOC at 46 and a quarter. Let me get rid of, and then our overnight VPOC might shift, you know, between now and the open, but really I'm looking at it staying where it is at 49 and a quarter. Okay, and then we can get rid of this, and we'll expand. This looks like we're going to get our Renko reversal bar here right now. And we can just expand this out just slightly. All right, so we're coming down to this 55 and a quarter, and 55 and a quarter is going to be an area that I will trade off of. Because if we get below 55 and a quarter, I'm looking for the close to be taken out at 5350. That'll be our initial target inside of range. So you want to get short and then get funded before 5350 with a possible rotation down towards the value area high at 51. That'll be our secondary target. Actually, it'll be a target and a trade area. So remember, trade areas are targets. It's just I'm looking for reaction at those zones and a the possibility that you would get responsive buyers or sellers there. So what I always do is I'll scale just before a trade area, and then I'll look to see how they react off of it. But I'll always have one left running, and then if they break through, these would be areas that I would do add-ons, okay, with the possibility of a continuation. So if we break below the value area and get inside a value area, obviously the target below is the overnight low at 47.25 with the VPOC right there at 46.25 with the LVN, and this is going to be a key CLVN for us today at 45.25, because I think if we get below 45.25, we are going to go and test the year open at 37.75. So I'm going to mark the 45.25 as a important trade area. We could get reactionary buying there and hold us, above, come down, take out the overnight low and the VPOC, then find responsive buyers and rotate back up to test the upper value area. But if we break, then you've got to be looking at a couple things. One, you're going to have, you probably by that time have an 80% rule, value area rule in play with the move down, and your target, which will be the value area low here at 42.75, which is just below that 43.50. And remember, we were playing off of that 43.50 earlier this week. And then below that, I'd be looking for the takeout of the naked close down here at 39.75 and a test to break below the range. So this would be a trade area. But really, what I'm looking for. So I'll put the trade area between the 39.75 and the range low, but I'm really looking for a move down to test the year open. And I'm just going to put this in and mark it as the year open so everybody is reminded that that is the year open. Oh, I can't type worth the darn today. Come on, Douglas. Okay, and then below that, then we're getting into this lower distribution. You've got a naked VPOC at 36.50, but the three targets, and where I think we just pop around is the 35.25. And I think if we get back into this distribution zone, we're going to pop around there again. 29.50. I mean, these are numbers that you guys can probably recite off of your head. I've talked about them for so long. At 25.25. With the major line in the sand for me. Anybody guess it? Of course, you're going to guess it. Oh, these are not trade areas. Targets. 35.25, 29.50, and 25.25. Anybody guess the major line in the sand? You got it, Elaine. 21.25. I think below this, we're going to see some retracement down into the to test the 1800 level. Preferences and because that'll get us, come on, that'll get us, on the other side of this triple distribution, and there's not much left below us to hold us up. We've already been down to the 1807 area, the 1807, 1808 area a couple times and picked up buyers. I don't think they're going to have any inventory left down here. And then I think we're going to see a move down, and I'm not even going to bother. You've got a first target that you want to look at, which is the 1850, which you want to shoot for and get funded. But really, you've got two trade areas, and it's really going to be a slush zone between this 1807.50 and this 1809 and a quarter. So we'll just split the difference. But the big target here below is that 1802.50, which I think is our next destination if we get below the 1821 and a quarter. All right, so that takes a look at a big move to the downside, which I don't think is likely today, but we always got to prepare and look at the levels on both sides, because nobody can tell you what the market's going to do. We can only have areas that we're going to do business and have our if-then-that strategy set up so that we can trade them and not have to think about it. We've already done the thinking. So above us, we've got 65. Okay, we're testing. We're going to get that Renko reversal bar now, so that's probably set up. Yep, there's the Renko reversal. So this bar, I think, is going to really tell the story coming into the open. And if we get the second Renko reversal bar, then I'd be looking for a move back towards the 51, but it's really 50.50 and 49.75 that I'm looking at as my key targets. But 51 will give you a test of the Kelter center line. So we're going to be, what time is it? 9:18. We're going to be opening up inside of range. So, my main hypothesis is use the 55 as your key area to trade off of. If you're going to trade the open, remember we've got news, Philly Fed coming up, so you might even want to wait until the Philly Fed comes out to make that first trade today, because it is going to be volatile. I think that you're going to get two-way action on the open, but if you're nimble and they get below 55, I think you'll get a move down to take out the naked close, so you could get in, get funded, and then just keep your stop really tight and take that trade. If we hold the 55, then remember we got 96% probability of taking out the overnight high or the overnight low. Well, if you hold 55, what do you think that probability shifts to, the high or the low? It's going to shift to the high, with the possibility of going and drifting up and testing this 58.75. But again, keep it nimble, keep it tight, don't be stubborn, take your loss quickly, okay, and get scaled quickly so that you're not stuck in a trade. And then just manage your stop aggressively on the open, because it is going to be a bit of a volatile open. I want to do one other thing, and then we're going to call a stop to this today. Just let me bring my so currently right now our Russell overnight high is 2690. I've already got my levels done on the Russell. I was just waiting to see if we put in that higher overnight high. So overnight high on the Russell is 2690. And we're currently trading 25. So you got your value area right here. You've got your value area right here at 25 and a quarter. And I've already got that set up as a trade level. Think of this as your 55 and a quarter for the TF. You're going to have the same type of scenario. If we hold here, then I'd be looking for a move to take out the overnight high and push to test the range high from yesterday at 27.50. The big major It's not Marjor. The big major resistance that we've got to watch above right now on the Russell is the 3190 area. You can just call it 32 if you like it. And above 32, then your main target, above 32, your main target above 32 is 39, with the other side of balance being here at 43. But if we hold below, I'd be looking for responsive sellers in around this 32 area to hold us below, because that's a major CLVN right now. And I just wanted to show you what happened. I was talking about this before I set up. Yesterday, using a swing low of October the 9th, 2013, which is what my composite is set at right now, we had a composite VPOC down at 1096.50 or 1096 and a quarter or whatever it was. We went down there and picked up buyers. Now we've had a shift yesterday of the composite VPOC to 1121. So value has moved, major price acceptance has moved higher. So I'm anticipating, because of this move and the fact that they've accepted accepted price higher, that we should get a test of this 3190 today. And if we get a test of the the 3190 and we break above it, then the major destination above is this 3950 and 46, 47 area, with 49 just above it. So this is a pretty a pretty nice level to trade off of right now. If we reject 32, then your VPOC, your composite VPOC, and your microcomposite VPOC are going to act as major magnets, and we'll get a rotation down here to pick up buyers. And they may do that even before going and testing the 3190. So just watch to see how they react in around this 1120. The key line below to watch, and if we hold above it, is this 1118, 1117.70. That's what I'd be looking below 1770. I think we're going to get a rotation down. I mean, my main target below is this. And again, I spelled this wrong. Is this 1107.50? This is main target below 1117. So personally, I think that you've got two really nice levels to trade off of today, 32 and 1117, and above or below you've got 1103 below, above you got 39, and then with the major magnet in between here at 1121. So getting close to the open, and I've got to have a conversation with Stealth Trader. So this is going to complete our morning market session. Just keep an eye on this this Renko bar right here on the Keltner, because I think it's going to tell the story. And again, the key level is the 55 and a quarter to open. But be careful today. Going to be volatility coming in the morning as they fight it out. Look at your open interest on your futures that you're trading, so you can see where the possible pins are, because we have OPEX today. But later in the afternoon, I think we're going to get a holiday drift in one direction or the other. As always, trade well, trade safe, and we'll catch you on the flip side.